she has, and this whole Labor government, they have the idea that the more you grow the size of government, the better it is for the economy. But and the bond markets, unfortunately, will buy this probably in the short term. But I venture to speculate. This is my forecast that in a year's time, gilt yields, the UK government bond yields, will be a lot higher than they're now, and she's going to have a much bigger fiscal hold than she has now. Wednesday, November 5th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, a week ago, I did a video about the British pound. I said it was steering on the edge as the government was likely to raise the basic rate of income tax. And it looks like this is going to be for certain now. They're going to raise the tax by probably 2%, from 20% to 22%. It doesn't sound like much, but believe me, it's significant. And we're going to continue on the topic of the pound today, because the pound has broken a key support that I was looking at and I told you about back on the 30th of October. And I actually think we're headed to parity. Yes, the pound could drop precipitously versus the dollar back to around the one level. It could even go lower. Does that mean the dollar is coming back? No, it's just that the pound is sinking even faster than the dollar. So we'll look at that. Before I do, I'd like to thank all of you again. The other day, I asked you to subscribe to the channel if you hadn't yet. The stats tell me that 40% of you that watch my videos aren't subscribed. So if you haven't yet, make sure you do. And the other thing that I'm guilty of sometimes, I forget to hit the like button of a video that I've really enjoyed. So yeah, don't forget to hit the like button as well. And some of you might have wondered where I get these from. This is Sound Money Stacker at Maneco 64 mug. It's got the silhouette of Rudy standing while sitting on his stack of gold and silver. Well, we have a merchandise store if you're interested in this kind of stuff. It's below in the description. We've got mugs, hats, shirts, water bottles, cushions. Yeah, go have a look if you're interested. Just a bit of fun and a bit of memento from the channel. Anyway, back to the pound, more serious topic, because it affects everyone. Most people, and hopefully by now you know that a falling currency is really what creates rising prices. And a lot of people don't understand that. They think that inflation causes rising prices. But, and it does to some extent, the inflation of the currency out of thin air, currency and credit, and a country whose central bank and government abuse that inflation more than others, their currency becomes worth less and less vis-a-vis other currencies, vis-a-vis goods and services in that country itself, because it's the simple law of supply and demand. And that's what's been happening to the British pound, unfortunately, since World War I. Up until then, of course, the pound was fixed to a weight of gold. The dollar was fixed to a weight of gold. And that ratio was at 4.87. And here we are now, just over 100 years. And the pound only fetches, well, $1.3. And back in 22, it dropped to 1.05. And it has done also another time back in the mid 80s, we touched around 105, 103. But I think now we could we could be headed even lower than those levels. We could go through parity with the dollar. And as I said, it doesn't mean to say that you should jump from the pound to the dollar. I actually think you should jump from all fiat currencies, of course, to gold and silver. That hasn't changed. But we're going to cover the pound versus the dollar because that's what most people look at. And it's a signal that things are wrong in this country. And talking about things being wrong, I just saw that Ma'am Donnie won the New York City mayoral election, and he's a socialist. So America, also New York voters choosing the wrong candidate. I guess. I mean, I'm apolitical. I think politicians are the problem. For me, ideally, it would be for everyone to boycott elections. Then they would lose their legitimacy and they'd have to do something different, right? But socialism, yeah, that's the problem here in the UK. And why am I so bearish on the pound versus the dollar now? Well, because socialists think that they know better than the market. They think that a committee of men and women can decide what the economy should be doing, what prices should be, what the price of money, how to run the healthcare of the country, how to run investments. They think that the government creates the wealth. They've got it all upside down. Yes, Rachel Reeves, the Chancellor of the Exchequer, or Minister of Finance equivalent here in the UK, her budget, there's been a lot of speculation because she's waited a very long time to come out with this budget. It's only going to come out on the 26th of November. And she's concerned about the bond market, but I can tell her she might get a short-term reprieve from the bond markets because she's sounding really tough on keeping debt levels down, keeping spending down by raising taxes. But the thing is, what socialists and even Keynesians who aren't socialists, and I would add fascism to this as well, because fascists as well like to centrally plan the economy. So they're all the same, actually. But this government we have now, it looks like they have some kind of death warrant for this country, that they want to destroy the economy. So in her first budget last year, she raised national employers tax, national insurance for employers. That hurt business massively, especially the what they call the restaurants and other businesses like that. Restaurants and other not entertainment, but hospitality industries like hotels. They can't hire as many people because it costs more, and it permeates throughout the whole economy. They're punishing small businesses with inheritance tax. They're punishing the very wealthy. We've had the most billionaires and millionaires leave the country of anywhere in the world. London used to be a place since the 80s that a lot of the wealthy from all over the world came to live here because the tax treatment was good. But now she's driving all those people away, and her fiscal hole increased. What she did last year was supposed to cover that, but it keeps increasing. And I'm going to tell her that in a year's time it's going to be even worse. And why do I say that? Do I have a crystal ball? No, it's just common sense and having read up on the Austrian School of Economics and how the errors of socialism and the fatal conceit of socialism always lead to disaster. And I feel really sorry for the residents of New York City that they have a socialist mayor from now on. But we have a socialist government in the whole country now. So what she's saying is, and she's breaking a pledge that, or a manifesto pledge that the Labor Party made last year before the general election, that they would not raise taxes for their constituents, for the common middle class average Briton. But now she's going to raise the basic rate, it looks like, from 20 to maybe 21, but I think more 2022. It could be even 23%. And why is she doing that? Why doesn't she raise rates on the very wealthy? Well, because she's done that already, and the higher rate doesn't. If she raises the higher rate, which is 45%, it doesn't make as much difference. She won't have as much revenue. So but one thing she's not going to do is cut the size of government, cut the size of the public sector, of the bureaucracy. And of course, the public sector, the bureaucracy, don't produce wealth. They don't even pay taxes. They might pay tax, but the salaries and wages they earn come from us in the productive sector. So she has, and this whole labor government, they have the idea that the more you grow the size of government, the better it is for the economy. But and the bond markets, unfortunately, will buy this probably in the short term. But I venture to speculate, this is my forecast, that in a year's time, gilt yields, the UK government bond yields, will be a lot higher than they're now. And she's going to have a much bigger fiscal hole than she has now. Yes, that's my prediction. Because she's killing, and she's going to have higher inflation as well. She's worried about that. Well, and why do I say that? Well, because she's killing the private sector, and the private sector is the only sector really that produces wealth. And she's growing the size of the public sector. So that's going to decrease the amount of goods and services produced in the economy by the private sector. It's going to make the public sector more, it's going to make it bigger, and they're going to spend more, and there's going to be less goods and services there to spend. So the economy is going to go down the tubes, or it's going to stay where it is, stagnant. And and also we're going to be importing more because we're not producing as much. And as we import more, our currency goes down versus the dollar. And also the debasement of the currency, the inflation, is going to lead to a weaker currency. And I think that's what the chart of the British pound is telling us, that it's going to be a disaster. And I noticed that Nigel Farage, who heads the major opposition party, Reform, it's weird to say that. It's always been the Conservatives, but they've dropped the ball. They're not the major, opposition party. He's even saying now that he won't be able to cut taxes. So things are really not good. And I'm going to show you some charts here of the pound. I've given you the fundamental reason why I think the pound's going down the drain, unfortunately. The other reason why it's going down the drain is that all the foreign capital is leaving. So what do you think the capital, that foreign capital that hasn't come here, are they going to be attracted to come here? No, that's also going to hurt the pound. Less demand for the pound. But anyway, I've got this long-term chart going back to 08 and 07, 08, and you can see that the pound actually had a last hurrah back in 07 in the that bubble of the housing bubble. It fetched just over $2.10. Then it crashed during that great financial crisis to around 135.90. And it's been going down ever since. You can see it's a downward channel. The trend is lower, and we're seeing lower highs and lower lows. And that's why I think we're going to parity, because the last low was during the Truss incident, the Quartank mini budget. The pound collapsed to like 103.50. And I think, we could go to parity, to 1, and even drop below 1. And it's not an outlandish prediction, because if you look at the dollar, for example, versus the Swiss franc, I remember when it used to fetch 2 Swiss francs, and now the dollar only fetches 80 centimes. So why not the pound as well versus the dollar? So that's the way I see it, and I'm going to show you a shorter term chart of the pound, which is the chart I kind of showed you last week. About a week ago, that we needed to break 131.40 or 50, and we have. And so in the short term, we're starting this move lower. I'm not saying we're going to parity in the very near future, but I would say in the next 12 months, that's a high probability. Of course, nothing is certain in life or in markets, but I think the trend, unfortunately, is a lot lower. We're sinking a lot lower than the dollar. And the reason why I say that is because the dollar is sinking as well versus gold, and that's not going to stop. So I still think the best protection for UK residents that have fortunately been able to save a considerable amount of fiat currency or fiat pounds is to try to get some physical gold. Silver as well, even though you pay VAT. I think silver is still a good place to be as well. And make sure you do it through coins of the realm, sovereigns, Britannias, because you won't be liable to capital gains tax, because they're legal tender. So I've got a chart here of the price of gold in British pounds, and that looks very bullish as well, or bearish. It's the pound that's dropping. Don't forget, gold and silver never change. A troy ounce of gold will always be a troy ounce of gold. And back in ancient Rome, it used to buy a very nice toga and leather sandals. And nowadays, you can go probably to Savile Row and buy a decent suit. And a pair of brogues for 1 troy ounce. So that's what it does. It maintains its purchasing power. In the short term, we could see that purchasing power go through the roof, especially in this era of monetary and financial chaos that we have. We've had over 50 years where the major reserve currency, aka the dollar, has been a fiat currency. It's something that never happened before, and that's why we have this problem. And the pound, of course, used to be the major reserve currency prior to the dollar, so it's linked massively to the dollar, but it's in the periphery, so to speak, right now, and I think it's going to suffer a lot more. So there you go. Let's quickly look at the markets this morning. It's just before 8 a.m. London time. So we've got spot gold at $39.70. It's up $38. Yes, yesterday when I spoke, gold and silver were actually pretty much unchanged. But when the US came in and the stock market dropped, everything was sold off. The miners got hit relatively hard. I'm not selling. I'm sticking to gold and silver. That's the place to be. Anyway, the high overnight has been $39.79 and the low $39.29. Silver is at 47.80. It's up 65 cents. So it's up 1.4%. The high's been 87. The low's been, 47.87. The low, 46.85. The stock market for now, it's steadied. The Dow is up 50 points. The NASDAQ is up, down 75. And the S&P is down 10. And some people think we could be in the beginnings of a major stock market correction. It's possible. We saw recently that Warren Buffett and his company Berkshire Hathaway sold another $6 billion worth of holdings, and they've got almost $400 billion in cash and cash equivalents. I think 380 billion, which is huge. And this ratio or indicator he looks at, the stock market, the market cap of the whole U.S. stock market to GDP, is the highest it's ever been. I think he knows something most of the market doesn't. So yeah, yesterday the NASDAQ composite finished down 2%, almost 500 points. S&P just over 1%. It's still not that much, but it's a start. So look out for the stock market. And there's a lot of talk as well, and I've spoken about this, about the fact that the government shutdown is, the continued U.S. government shutdown is leading to a lot of drainage of liquidity in the system, because the federal government provides a lot of money for a lot of people and a lot of institutions. So the longer they keep the government shut down, the more there is a danger of some kind of financial crisis, really. So with that, I'm going to wish you all a very good day. Take care. Bye.